Hi, everyone. This is Jeff Clark of the Paydirt Podcast, and I am here with some exciting news, a company that hit Paydirt today. It's very exciting. John Florek, CEO of Emperor Metals. John, thanks for joining me on this video to talk about the great results you had today.
Yeah, great. Thanks for having me, Jeff. And I look forward to seeing you down in Boca Raton soon, right? In July at Rick Will's Symposium.
Yeah, we'll see about that. But I want to go over this hit that you had today, and I think this video won't be out till tomorrow, but you hit 61.5 grams per ton gold, so almost 2 ounces of gold over 15 meters. So that adds up to, if I do my math right here, that adds up to 922.5 gram meters gold. I say in the book Pater, we're always looking for over 100. We like to see things over 100. Obviously, you blew that out of the water, and you also had 369.6 grams per ton gold over 2.4 meters. You also had visible gold in multiple zones within this one intercept. So, John, congratulations and talk to us about this drill hit you reported today.
Yeah, I mean, I guess we've been signaled to the market that we're seeing visible gold. And if you recall our last drill program, we ended with, a whopping 30, five, I mean, what is it? 35 grams per ton over 27 meters. It was pretty significant. And so here we are, we're just basically displaying again that, with the 15 meters of 61.5 grams per ton, that, you know, w- we're, we're hitting all this visible gold. We add ounces internally to the deposit. Like in 2025, we doubled our resource to 1.5 million ounces. As we tighten up the drilling, we're seeing where we have intersection plunge lands of mineralization where they intersect. We either see 3x in thickness with similar grade, or we see 3x in grade with similar thickness. So we're adding ounces. Okay. And
Yeah.
also at the same time, if you recall, if you just look at our recent press releases, um, we had 35 meters of 3.1 grams per ton in our last press release. And prior to that, we had 107.5 meters of zero point 0.5. And that's important that a lot of readers don't, or investors misunderstand that 107.5 meters of zero point 0.5 is so important to reduce stripping ratios because what we're trying to do is develop that conceptual open pit over the high grade underground gold deposit. We're thinking that we could potentially get an open pit of like at least 2 grams and above and underground 5 or 6 grams per ton. As we tighten up this drilling and we see more and more visible gold, who knows? Could go a lot higher.
Yeah. Now, this is that Duquesne West flagship property, arguably, right, for the company in Pro Mining Quebec. Um, John, the open pit model is more of a bulk tonnage type of conceptual idea, right? Uh, Tell us where these higher grade hits are in relation to this open pit model and what it does for eventual mining someday.
Yeah, I mean that's a good question. So we have about 8 of these high grade lenses that migrate up into the open pit environment. They get even richer at depth. So we
Uh,
do have these lenses in the open pit, which is great from a mining perspective. Um, but more importantly, like you said, in the open pit, we want to see what we're seeing is no one sampled the host rock, and we're seeing that contains gold as well. So by sampling the host rock of these around these high grade lenses, we're able to lower stripping ratios, improve the economics.
mhm.
I mean, obviously, open pit environment, people love it. It's easy. It's like $8 a ton to mine compared to like $100 per ton underground.
Yeah.
So we really want to develop the open pit concept because if you think about it, you know, you could build ounces more rapidly in open pit because the cutoff grades can go down to like zero point 0.4 or 0.25 or whatever.
Yeah.
That way you can mine at a profit, lower grade gold and grab more ounces to feed the mill. So that's what we're doing. We're trying to expand this project rapidly, but with the open pit concept, as well as knowing full well that we have very, very high grade underground beneath the open pit and within it.
Yeah, that's great. I'm really happy for the company. It's great to see. And what this tells me as an investor is that you're on your way to 2 million ounces. I don't know if you can say that, but I can. I think this is going to be a 2 million ounce deposit and then some. We'll see how that proves up by this time next year, I guess, right? But you're adding ounces. It's getting economic, more and more economic because of these high grade and wide intercepts, whether it's high grade underground or the bulk tonnage ones, right? And that is the number one question, in my opinion, every investor has to ask when they're investing in a junior mining stock, and that is, will this be an economic mine? And I'm not the first one to say that, but that is the focus, in my opinion, of what every investor should be looking at when they consider this. And John, Duquesne West is becoming more and more clear that it's going to be an economic mine someday. Do you want to comment on that?
Yeah, I mean, when you look at intercepts like this, if you go through grams per ton per meter, um, a lot of those, when you look at them closer, they're active. They're actually intercepts in actively mined scenarios, right? That they're actually in
Mm,
production.
right.
So here's those jewelry boxes that you see like this within the open pit environment are so instrumental. They give you that boost in grade. And it makes or breaks the economics and stuff like this have an upside. I mean, we're demonstrating to the market that even without these big jewelry box intercepts, we were economic. And now we're displaying that there's a lot more upside to this project when you hit intercepts like this. And keep in mind, even in 2023, we're hitting 10.8 meters of 15.8 grams per ton. So we have good thickness surrounded by
Yeah.
this low grade bulk tonnage. So this is the story we want the market to see. We've been somewhat overlooked, and I even have some arithmetic calculations in regards
Yeah, you and
to.
I were talking about that. Tell us that math because it's very interesting, very compelling for the stock.
Yeah, so what I've been telling people and not telling people what we've seen with this junior here in Bird Metals is that for the last 2, 3 years, we've been 20, $30 million market cap. Recently, we're at 40. Today was a good day. We're hitting up into the 50s probably. Um, but all things being equal, we'll just take 30 million as an average market cap in the last 2, 3 years. And in that time frame, okay, gold has gone up by 2.5x to 3x. We'll use 2.5. So 30 million, all things being equal, times 2.5x is 70 million. In 2025, we doubled our resource from 727,000 ounces to 1.5 million ounces on our flagship property. So 70 million times 2 is 140 million. And then also in 2025, we picked up Lac Pelletier. About 80 million has been spent in that project, has a mining permit in place. Average recovery is 96%. Grade is about 4 grams per ton. I could probably sell that for 50 million cash right now, but I'm not. We want to bring this into production with the 1,000 tons per day mining permit that allow us to get 40,000 ounces per year. We want to dewater it, rehab it, and put it into production. So that's worth at least 50 million if I just sold it today. So we're ranging between 150, $200 million market cap just with those three catalysts that never occurred when we put those releases out.
Yeah, that's where you are today. And today the market cap ballooned up to 55 million. So you're still a quarter below that, roughly. So
True.
I think there's lots of potential. And for those of you who may not have watched here today, the stock is up 42% in the US here as we near the close on Tuesday, June 16th. So the market obviously likes what you reported here today. So again, I just have to say congratulations because I think this is one of your best holes ever at Duquesne West. Am I right about that?
Oh, absolutely. Lots of splashy gold. Everybody loves it. And, be probably one of the top 10 in all of Canada for 2026. Who knows?
Yeah, right, right. So you mentioned your other project. John, can you update us on that? Because a lot of attention's gone to Duquesne West today, but you're working in the background also with your other project, right?
Yeah, the other project is sort of like an orphan near production mine that basically became orphaned in like 2010 because it was smaller. And the company that was ready to put that into production at $1,000 gold, and we're excited about it, got acquired by a larger entity. So now in 2025, we acquired that asset for basically a penny and a half on the dollar spent.
Yeah.
Very good deal for our shareholders. So what we've been always doing it wasn't until recently that gold has gone ballistic or parabolic, whatever we want to call it. We were trying to be nimble as possible. We wanted a near-term production story. Like I said, they were excited to mine this at $1,000 gold. There's a couple bulk samples. There's several feasibility studies that were done in the past. There's 3.3 kilometers of underground development, a vent raise. So we want to dewater it, rehab it, and put it in production.
And
Um,
so what's happening this year at that project, John?
Yeah, this year at this project, basically, we are updating the 43-101 report currently,
Uh,
so we can put that into investors' mindset that we're not at $1,000 gold. We're at more like $4,000 to $5,000 gold. And what does this deposit look like, Ryan?
4,500, yeah.
Yeah, and so we're 5 times more excited than the previous guys that were
Yeah.
excited about
That's a good
mining
way
at
to put it, right?
dollar
Yeah.
gold. So that's exciting. And I guess, at 1,000 tons per day, that's 40,000 ounces per year. And that's at $5,000 gold, that's 200 million of revenue per year. We're thinking a minimum in the near term is a 10-year mine life. We can get this up to 400,000 ounces quite quickly and then put in a path to over a million plus. So that's the plan.
Yeah, great. That's exciting on it in its own right, right?
Absolutely.
And
Some people like that
Emperor's,
Orphan better than Duquesne
yeah,
West, which
right.
is more like 3 to 5 million. It's a more of a tier one story at Duquesne West currently. And Lac Pelletier is an underground only type of a mine right now.
Yeah, gotcha. So you're in the middle of a 15,000 meter drill program up at Duquesne West, plus 8,000 meters of resampling, right? So tell us about all of that, where you're at with that, and what's still ahead there in terms of drilling and reassaying.
Yeah, the 23,000 meters you just outlined of additional assays that'll go into this model. We released about 33% of it. About of the 15,000 meters of drilling that we're doing, about 50% has been released, but as it goes, we're very efficient. We have good drillers, a good team. We're well under budget. We could probably squeeze out with the budget that was allocated for this phase, probably squeeze out, 17 to 18,000 meters instead of 15,000 meters because we were like $1 million under budget, which is great. And we'll still have like $7 million in the bank. So a lot of catalysts to come. And we're still going to have a lot of money in the bank. And then once that's done, we'll reevaluate and then probably have another phase of drilling.
Yeah, well, that amount of cash will probably get you through 2026. Is that a fair statement?
Yeah, absolutely. We have lots of catalysts. We don't need to refinance anytime soon.
Yeah.
So yeah, it's a good position to be in, put it that way.
Yes, yes. So a company hitting very high grades with a bulk tonnage asset and a resource already in place, a stock that's a quarter of what it could be valued at just today alone, on its way to adding ounces and becoming an economic mine. Um, you can read all about this stock for free at thegoldadvisor.com. The company is a sponsor of the site. We invited them because of the potential we saw, and now we're seeing that potential come to realization. Stock is still undervalued in our opinion. We are still buying it. I have personally owned an overweight position in this stock, so I think there's going to be a lot more fun things ahead. And John, just to wrap it up, you don't even need to build a mill, right?
Yeah, absolutely. So both of these projects, they have highways running through it, and it's one of the top jurisdictions in the world for gold production. Like you've described before to your subscribers, there's 200 million ounces of gold that's been produced in this district, probably another 200 million actually. A lot of companies got their start here because it's just so prolific and the grades are so rich in this district, or the Southern Abitibi is what we call it, that it is the place to be to start a company and eventually turn into some sort of mining company.
Yeah, and a lot of mills in the area are lacking ore, right? They need more ore. So
Yeah,
that
they're,
makes
they're all under
Emperor,
capacity. Yeah, absolutely, they're all under capacity, and we wouldn't have to build a mill, wouldn't have to build a tailings dam. So the capex, we would save $500 million to $1 billion putting these things into production, and that's
yeah,
going to be a quick payback period, a healthy rate of return, in which everybody likes a good, healthy MPV, right?
right. And it also makes you a potential buyout target at a premium, of course, for us investors. So well, John, great news. We'll look forward to all the other news you're going to have released here throughout 2026. We look forward to it. Any of that could be catalyst. So, John, thanks for joining me here at the Paydirt Podcast.
Yeah, thank you very much. Remember, AUOZ for our ticker symbol on the
There
Canadian
you go. We can
Securities
see it in the
Exchange.
background on your,
There you
yeah, there you
go.
go. So, okay, thanks, John. We'll talk to
Thank
you
you,
again
Jeff.
soon.